This is the real story of Florida's housing market in 2026, and what you've been hearing is probably wrong. Over the past year, videos have flooded YouTube with terrifying predictions about millions of Florida homeowners being forced to sell, insurance premiums tripling overnight, and a housing disaster that would make 2008 look mild. These videos painted pictures of teachers choosing between keeping their homes and sending their kids to college, and retirees watching their life savings evaporate while the year 2026 loomed as a deadline that millions of families wouldn't financially survive. I watched one of these videos recently, and it listed 10 Florida cities supposedly drowning in a perfect storm of collapsing home values and skyrocketing insurance. Cape Coral, Fort Myers, Tampa, Miami, the Villages. The narrative was compelling and the statistics sounded devastating, which explains why millions of people watched it and probably made major life decisions based on what they heard. So I did what any reasonable person should do and checked the actual data. I pulled the most recent reports from the Florida Office of Insurance Regulation, the state's official Realtors Associations, federal foreclosure databases, and the governor's own announcements from just days ago. What I found surprised me. Today we're going to do something different by looking at the verified, sourced, current data on Florida's housing market. Not predictions from 18 months ago and not cherry-picked worst-case scenarios. The actual numbers, as of January 2026. Some of what I found will validate concerns you've heard, because Florida does have real challenges. But a lot of what I found directly contradicts the doom and gloom narrative that's been circulating, and I think you deserve to know the difference. We'll start with the biggest claim, which is insurance. If you've watched any video about Florida housing in the past 2 years, you've heard about the insurance crisis, premiums doubling and tripling, companies fleeing the state, homeowners getting renewal letters that made their jaws drop. That was real. In 2022 and 2023, Florida's insurance market faced genuine crisis conditions that nobody could ignore. 6 property insurers went insolvent in 2022 alone, and Citizens Property Insurance, the state's insurer of last resort, ballooned to 1.4 million customers by 2023 because private companies were either leaving or refusing to write new policies. But here's what those viral videos aren't telling you. The story changed, and it changed dramatically. In January 2026, Governor Ron DeSantis announced what he called major insurance rate relief for Florida homeowners. Before you dismiss that as political spin, let me give you the actual numbers from the Florida Office of Insurance Regulation. Citizens Property Insurance policyholders will see meaningful premium reductions beginning in spring 2026. Not increases, but reductions. The statewide average cut is 8.7%. And over 330,000 policyholders across all 67 Florida counties will see their rates decrease. More than 150,000 of them will see reductions of 10% or more. In South Florida, where insurance has been most expensive, the numbers are even better. Miami-Dade, Broward, and Palm Beach counties are looking at an average 13.4% reduction. In Palm Beach County specifically, 26,000 homeowners will see an average decrease of 11.9%. And Monroe County down in the Keys, where premiums have been astronomical, will see over 1,000 homeowners get an average reduction of 11.3%. This isn't a projection or a hope. These are approved rate filings taking effect this spring. Private insurers are cutting rates too. State Farm filed for a 10% reduction statewide. Florida Peninsula proposed an average reduction of 8.4%, and Patriot Select Insurance reduced premiums by 11.3%. Heritage Property and Casualty got approval to lower rates by 9.6% for Seminole County and 7% for Osceola County. In total, 83 rate decrease filings were scheduled to take effect in January 2026, and another 100 filings requested no rate increase at all. 17 new insurance companies have entered Florida since the reforms were enacted. I want to be clear about something here. Florida insurance is still expensive compared to the national average, and the statewide average premium according to the Florida Office of Insurance Regulation sits around $3,748 per year. That's 34% higher than it was in May 2022 before the reforms started taking effect. But here's the point that matters. The trend has reversed. We're no longer talking about premiums exploding, we're talking about the first rate cuts in a decade. Citizens is planning its first rate decrease since 2015. The December 2022 reforms eliminated one-way attorney fees that had made Florida a hotspot for insurance litigation and cracked down on assignment of benefits practices that were driving up costs. According to Gallagher Re, a global reinsurance firm, 2024 became the first year since 2016 that Florida's domestic property insurance companies turned a collective profit. Citizens went from 1.4 million policies at its peak in 2023 to just 395,144 policies as of January 2025. That's a 50% reduction in a single year, which represents the lowest level in 14 years. That's not a collapsing market, that's a recovering one. Heritage Insurance CEO Ernie Garritaix explained it simply when he said the data from 2023 to 2024 and what he expects from 2025 shows expected losses and more normality in the industry, which will allow them to take down those rates. So when you see videos claiming that insurance is going to force millions of Floridians to sell in 2026, ask yourself whether they're using current data. The current data tells a very different story. The viral narrative says Florida home values have crashed, wiping out equity for recent buyers and leaving families underwater and trapped. The reality is more complicated. Prices have declined from their pandemic-era peaks, but the scale of those declines varies dramatically depending on where you look and when you measure from. At the statewide level, here's what the actual data shows. According to Zillow's most recent numbers, the average Florida home value is $384,811, down 4.3% over the past year. Not 11%, not double digits, but 4.3%. The Florida Realtors Association reported that the statewide median sales price for single-family existing homes at the end of 2025 was $413,990, down just 1.4% from the previous year. For condos and townhouses, the declines are steeper. That median hit $310,000 at year's end, down 4.7%. We'll talk about why condos are different in a bit. Some individual markets have seen larger drops, and Cape Coral-Fort Myers is probably the most dramatic example. According to Zillow, Cape Coral's average home value sits at $398,122, down 4.7% year over year. Redfin puts November 2025's median sale price at $370,000, down 5.1%, and one analysis from the Home Buying Institute found declines of about 10% over the past year in the broader metro area. Wall Street Journal called Cape Coral the worst housing market in America, but here's what that headline leaves out. Local realtors push back hard on that characterization because the Royal Palm Coast Realtor Association pointed out that the June 2025 median sale price in Cape Coral was $361,975 compared to $355,000 in October 2021. If you bought before the pandemic frenzy, you're still ahead. What we're seeing isn't a crash, but what economists call a normalization. Home prices soared during the pandemic, jumping over 60% in Cape Coral between 2020 and 2022. That was never sustainable, and the correction we're seeing now represents prices returning to something closer to what local incomes can actually support. Here's something else you might not expect. Not every Florida market is declining. Gainesville saw prices increase 6.6% year over year as of May 2025. Sebring was up 3.6%, and Ocala was up 1.8%. Miami's single-family home market is actually still rising, with Miami-Dade County single-family home median sale prices increasing 3.27% year over year in November 2025 to reach $671,250. Single-family prices in Miami have risen in 167 of the last 168 months, which represents 14 consecutive years of appreciation with only one down month. The Florida Realtors chief economist, Dr. Brad O'Connor, summarized 2025 by saying it brought Florida a stronger, more sustainable housing market. He noted that the year ended with positive momentum as single-family home sales were up year over year in the final months. New pending sales had 5 consecutive months of positive growth through December, which was the longest such streak since the pandemic housing boom in 2021. Everything is not perfect. Homes are taking longer to sell, and the median days on market in Florida is now around 80 days, up from pre-pandemic levels. Some markets, especially in Southwest Florida, have over 6 months of inventory, which favors buyers over sellers. But prices moderating and buyers having more negotiating power is a very different story than millions being forced to sell. If people are really struggling, that's where it would show up in the foreclosure data. According to Atom Data Solutions, foreclosure filings nationwide totaled 367,460 in 2025. That's up 14% from 2024 and the highest level since 2019. Florida specifically has the highest foreclosure rate in the nation as of October 2025, with 1 in every 1,029 homes facing some stage of foreclosure. Tampa ranked first among large metro areas, with 1 in every 1,273 housing units facing foreclosure. That sounds bad, and it's worth taking seriously. Real families are struggling, and rising costs from insurance, taxes, and general inflation are putting pressure on household budgets. But here's the context those alarming headlines often leave out. Atom CEO Rob Barber, in his company's own report, explained that the increases appear to reflect a gradual normalization in foreclosure volumes as market conditions adjust, and some homeowners continue to navigate higher housing and borrowing costs. He specifically noted that overall filings remain well below pre-pandemic norms and are a fraction of what we saw during the last housing crisis. The numbers back that up. At the peak of the 2008 crisis, there were nearly 2.9 million foreclosure filings in 2010 alone. Even 2019, a normal pre-pandemic year, had 493,066 filings. Today's 367,460 is well below that. Fernando Ferreira, a professor of real estate at Wharton, told Newsweek that even if we see deterioration in the labor market, which could increase foreclosures in 2026, it will not be comparable to the catastrophic foreclosure crisis of the Great Recession. Some Florida metros do have genuinely elevated rates. Lakeland had the highest foreclosure rate in the nation in 2024 among metros with at least 200,000 residents, and Cape Coral, Jacksonville, and Orlando all have rates more than double the national average. But here's what's interesting about the Orlando area specifically. The Orlando Regional Realtor Association reports that distressed sales, which include both short sales and foreclosures, are actually down 51% from just 2 years ago. The association's president, Lawrence Bellido, explained that longtime homeowners and people who bought during the post-pandemic period when prices were low have significant equity cushions from the subsequent price appreciation. The pattern emerging shows foreclosure risk concentrated among specific groups. These include people who bought at the absolute peak in 2021 or 2022 with minimal down payments, people with adjustable rate mortgages now facing higher payments, and people in markets that saw the most extreme pandemic-era gains and are now correcting. That's a real problem for those specific homeowners. But it's not millions of families forced to sell, it's a market correction affecting the most vulnerable buyers in the most overheated markets. There is one area where the concern is genuinely warranted, and I want to give it the attention it deserves. Florida condos face real problems. You might remember the Surfside condominium collapse in June 2021. Champlain Towers South, a 12-story building in Miami-Dade County, partially collapsed in the middle of the night, and 98 people died. It became the deadliest structural building failure in American history. Investigations revealed that the building had significant structural problems that had gone unaddressed for years, and it turned out that Surfside wasn't unique. Many Florida condo buildings, especially older ones near the coast, had been deferring maintenance for decades, keeping fees low but letting infrastructure deteriorate. Florida responded with the Building Safety Act, which requires regular structural inspections for buildings 3 stories or higher. If a building is 30 years old or 25 years old if it's within 3 miles of the coast, it needs an initial milestone inspection by December 31, 2025. After that, inspections are required every 10 years. Buildings also now need something called a Structural Integrity Reserve Study, or SIRS, which evaluates roofs, foundations, load-bearing walls, plumbing, and electrical systems, and establishes funding plans to maintain them. Here's the change that matters. Starting in 2025, associations can no longer waive or underfund reserves for these structural items. For decades, many condo boards kept monthly fees artificially low by voting to waive reserve requirements. That era is over. The result is that many older condo buildings are now facing massive special assessments to fund repairs they should have been saving for all along. At the Cricket Club in North Miami, residents received special assessments as high as $134,000 per unit in 2024. At Mediterranean Village in Aventura, some owners were assessed up to $400,000. These aren't hypothetical numbers, but real bills that real people received. Nearly 900,000 condo units in Florida are in buildings over 30 years old and subject to these new requirements. That's a lot of assessments on the horizon. The condo market reflects this uncertainty. According to Florida realtors, the median price for condos and townhouses statewide was $310,000 at the end of 2025, down 4.7% year over year, a steeper decline than single-family homes. In Miami-Dade, condo prices fell 9.5% year over year in November 2025. The condo inventory sits at 13.9 months of supply, which is firmly in buyer's market territory. Compare that to single-family homes in the same county, which have 6.5 months of supply and prices that are still rising. There's another complication worth knowing. Only 21 of the 2,397 condominium buildings in Miami-Dade, Broward, and Palm Beach counties are approved for FHA loans, which works out to 0.9%. And Florida is the only state that requires a buyer to put down 25% for a limited review if the condo building doesn't have enough in reserves. Every other state requires just 10%. What does this mean practically? If you're trying to buy an older Florida condo with less than 25% down, you might not be able to get financing. And if you're trying to sell one, your pool of potential buyers just got a lot smaller. One analysis found that nearly 70% of condos sold in early 2025 closed below the asking price, with final sale prices averaging 4 to 5% under list value. The state has tried to provide some relief. In 2025, Governor DeSantis signed HB 913, which gives associations more flexibility by extending the SIRS deadline by 1 year to December 31, 2025. It allows associations to pause reserve funding for up to 2 years after an inspection to prioritize funding repairs, and it lets associations use loans, lines of credit, or special assessments with proper approval. If you're a condo owner in Florida, particularly in an older building, you should be paying attention. You should know when your building's milestone inspection is due, understand your association's reserve funding situation, and be prepared for assessments. But even here, context matters. These requirements exist because buildings were falling down. The Surfside collapse wasn't an isolated incident, but a wake-up call about systemic deferred maintenance across the state. The new rules are designed to make buildings safer, and the short-term pain of higher assessments is the price of decades of underfunding. Putting this all together, who in Florida is actually facing serious financial pressure from housing costs? Based on the data, the highest risk groups include several specific categories. First are people who bought at the absolute peak of the pandemic market, roughly 2021 to early 2022, with minimal down payments in markets that have seen the steepest corrections. If you bought in Cape Coral in early 2022 with an FHA loan and 3.5% down, you might be underwater right now because the market there has declined enough that your home could be worth less than your mortgage balance. Second are condo owners in older buildings that need significant repairs. If your building is facing a 6-figure special assessment and you can't afford it, you may have no choice but to sell, possibly at a loss, in a market where buyers are scarce and financing is difficult. Third are people on fixed incomes, particularly retirees, who have seen their property taxes and insurance costs rise faster than their income. Even with insurance rates now declining, the cumulative increase since 2020 has been substantial. Fourth are people with adjustable rate mortgages who are now facing significantly higher payments as their rates reset. For these groups, the financial pressure is real. Some will lose their homes and some will be forced to sell at a loss, which is a genuine tragedy for those families. But here's what the data does not support. The claim that millions of Florida homeowners face imminent financial collapse is not backed up by the numbers. Insurance costs are not still spiraling out of control. Home values are not crashing statewide. And 2026 is not some kind of deadline, after which the entire market falls apart. The Florida median household income is about $75,630 to $77,700 depending on how you measure it. And the average public school teacher salary runs around $50,000 to $54,000. These aren't high numbers, and housing affordability is a legitimate challenge, but the market is adjusting. Insurance rates are coming down, home prices have moderated from unsustainable pandemic peaks to something closer to normal, and inventory has increased, giving buyers more options and more negotiating power. Dr. Brad O'Connor, the chief economist for Florida Realtors, noted that while 2025 started much like 2023 and 2024 with sales falling and inventories rising, things changed midway through the year. Along with a continued slowdown in homeowner insurance premium growth, mortgage rates fell by more than half a percentage point in the waning months of the year, and sales really responded. That doesn't sound like a market on the verge of collapse. It sounds like a market finding its footing after years of pandemic-induced chaos. I want to step back and talk about why these doom and gloom narratives spread so easily and why pushing back with actual data matters. Fear gets clicks. A video titled "Florida's Housing Market is Stabilizing After Turbulent Years" doesn't have the same hook as Florida's 2026 housing disaster forces millions to sell now. One of those gets shared and the other doesn't, but these narratives have real consequences because people make major life decisions based on what they hear. A family in Ohio thinking about relocating to Florida might abandon their plans based on a viral video using outdated statistics. A Florida homeowner might panic sell at a loss because they're convinced the market is about to crater, when in fact, they could wait for better conditions. Real estate decisions are among the biggest financial choices most people ever make, and they deserve to be made with accurate information. The viral narrative about Florida housing typically relies on a few techniques. It uses data from 2022 or early 2023, when the insurance crisis was genuinely severe, without mentioning the reforms that have since taken effect. It cherry-picks the worst-performing markets and presents them as representative of the entire state. It compares current prices to pandemic peaks without acknowledging that those peaks were unsustainable bubbles. And it extrapolates short-term trends into long-term catastrophes. The actual data tells a more complicated story. Some markets are struggling and some homeowners are in trouble. Condos face unique challenges and affordability remains a problem for many Floridians. But insurance rates are declining for the first time in a decade. Home prices are stabilizing after necessary corrections. Foreclosures, while rising, remain far below crisis levels. The market is normalizing, not collapsing. Professor Fernando Ferreira from Wharton put it clearly when he explained that even if conditions worsen, what's happening in Florida will not be comparable to the catastrophic foreclosure crisis of the Great Recession. Adams' Rob Barber described the current trend as a gradual normalization in foreclosure volumes as market conditions adjust. Florida Insurance Commissioner Mike Jaworski stated that they are seeing nothing but good news across all data points for Florida's auto and home insurance markets. These aren't people with a vested interest in spinning positive narratives. These are analysts and regulators whose job is to understand what's actually happening. Where does this leave us? If you're thinking about buying a home in Florida, you're actually in a better position than you would have been 2 or 3 years ago. There's more inventory, sellers are more willing to negotiate, insurance rates are coming down, and mortgage rates, while still elevated, have fallen from their peaks. If you're thinking about selling, you probably won't get the price you might have gotten in 2022. But prices have stabilized in most markets, and if you bought before the pandemic boom, you likely still have significant equity. If you own a condo in an older building, you need to understand your association's financial situation and be prepared for assessments. This is the one area where genuine caution is warranted. If you're already a Florida homeowner and you're worried about your financial situation, look at the actual numbers. Find out what your insurance renewal is actually going to be this year by checking with your agent because rates are declining across the market. Look at recent comparable sales to see what your home is actually worth today, not fear-based predictions. Figure out whether you have equity and whether you can afford your payments. If the answers are yes, you're probably fine. The story of Florida housing in 2026 isn't a disaster movie, but a market that experienced a pandemic-fueled boom, went through a painful correction, and is now finding its equilibrium. That's not as dramatic as millions forced to sell, but it has the advantage of being true. Thanks for watching. If you found this useful, consider subscribing for more evidence-based analysis of housing markets and economic trends. And next time you see a viral video making dramatic claims about real estate, check the actual data before you make any decisions. I'll see you in the next one.